In the grand theater of modern finance, some figures command the stage with booming voices and grand gestures. They are the traders, the speculators, riding the market's volatile waves. And then there are the quiet architects, individuals who work behind the scenes, not merely trading assets, but rebuilding them from the inside out. Clayton Dublier belongs firmly to this second category, co-founder of Clayton Dublier Rice, a name linked not to flashy acquisitions, but to operational improvement, a counter-narrative to overnight success, patient, intelligent, hands-on value creation. His approach reshaped what an investor could be, operator as much as financier. Brick by brick, companies emerged stronger, more competitive, more resilient. Every great career has a formative period of quiet learning. For Dublier, it began near the factory floor and manager's office. He studied business as a living organism. Processes, workflows, inefficiencies. He learned supply chains, production lines, customer service, end to end. He listened to frontline experts who felt daily friction points. This gave him a lens to see not just what is, but what could be. Private equity became the natural evolution of that operational fluency. The goal was partnership and fundamental improvement, not just leverage. Reputation was built on turnarounds, effective fixers, not financial engineers. Through steady, real work, sometimes years, the firm restored health and profitability. At the core was a clear blueprint for business development, direct action over passive ownership, like restoration, patience, respect for structure, skilled hands. First, install strong, operationally focused leadership. Strategy is worthless without the right people to execute. Then a thorough diagnosis, surgical interventions, not blunt cuts. Refocus on profitable products and modernize legacy systems. Redesign supply chains to cut lead times and inventory costs. Tangible, measurable changes create a healthier enterprise. Unwavering focus on cash flow, the lifeblood of the business. Strong cash flows, weather downturns, and fund growth. Even low-earnings firms can shine once operations unlock steady cash. Financial success came from a disciplined, repeatable system. Buy, improve, sell. They raised long-term capital from pension funds and endowments. Stable funding enabled long-term health over short-term pressures. They did not overpay. Room left for operational value creation. Targets were good companies with solvable problems. Operating partners implemented the growth blueprint. Streamlining lowers costs, lifts margins, strengthens cash flow. Exits, sale or IPO, captured the created value. Responsible leverage amplified the gap between purchase and exit. The key: value was created through operations and results were consistent. Distilled into principles, the Dublier Doctrine guides pragmatic investing. Invest in what you truly understand, how value is actually created. Trace the path, source, make, move, sell, serve. Ask, where are the inefficiencies? What most impedes performance? Prioritize cash flow. Profits can be illusory, cash is real. Tighten the cash conversion cycle. Receivables, inventory, supplier terms. Focus on incremental improvements. Quick, tangible, compounding. Track small wins with simple metrics. People matter most. Great teams outperform great plans. Put the right managers in charge, grant autonomy, and be patient. CD&R's portfolio mirrors the real economy. Industrial, distribution, retail, services, healthcare. Industrial manufacturing and distribution, electrical components, plumbing, building materials. Improve logistics, procurement, and production efficiency to expand margins. Consumer and retail, modernize stores, fix supply chain, elevate private label, build e-commerce. Get the blocking and tackling right to restore relevance and profitability. Services, fleet management, waste disposal, equipment rental, route density and asset utilization. Technology leverages better, faster service. Healthcare services, recurring revenue, operational complexity, disciplined improvement. Hands-on collaboration, reviews, walkthroughs, customer and supplier meetings, set priorities, fund wisely, recruit talent, build healthier, more valuable companies. Clayton Dublier showed that profound value is built, not found. It demands operational intelligence and patient, unglamorous work. Treat acquisitions as opportunities to renew, not just transact. Understand operations, make incremental improvements, focus on cash, control costs, install strong leaders and support execution. Patience threads through everything. Meaningful change takes time. The result, billions in returns, and companies made stronger and more resilient. Private capital can drive efficiency and growth for all stakeholders. Serious wealth was built not by trends or audacious bets, but by fixing what was broken. For any size company, the surest path is building a better, stronger, more efficient enterprise.